afternoon, good evening, everyone. Thank you all so much for joining another webinar here at the United States Senate Federal Credit Union. As always, we're going to give everyone about a minute or two to join, and then we'll get started here very shortly. Thank you all so much again for those that are always coming in right on time, right at 6 p.m. So we truly appreciate you all, and hope you all are excited to learn a lot of great information in regards to student loans. As many of you know, all of those that have student loans, all of those payments will be resuming here very soon. So we have an excellent presenter today that will be doing an introduction here very soon. But once again, we just wanted to thank you all for making time out of your busy schedules and coming in and joining us on what is now a routine here for us of hosting all of this webinars every Wednesday night. So thank you all so much again. Just going to give it about one more minute. So we'll wait until 6:02, and then we're going to get started here very soon. And in the meantime, I also want to invite you all to our next week's webinar, how to protect your financial data online, another exciting topic. So if you haven't registered yet, we'll invite you all to go to our website, ussfcu.org, and then you can go to the list of the link where we have the webinars, and you'll be able to see the list of all of the webinars we have available, and the link to register. So once again, we just want to thank you all for coming in and joining us.
And Milton, I'll just go ahead and throw the direct registration link in the chat box too, to make it easier.
Awesome. Thank you, Carrie. And I will also say that if anyone has any questions while we're doing a presentation, feel free to submit your questions on the chat feature, or you can also put your questions on the Q&A section. Either or, it's our commitment, as always, that we will be answering every question before we finish the webinar. Again, if anyone has any questions, feel free to submit them either through the chat or the Q&A function.
Okay, we're going to go ahead and get started. Welcome to this week's Wednesday webinar. We are just honored to have you join us this evening. I will always say that please spread the word about our credit union to your friends, your family, your neighbors, your colleagues. We would be honored to help them with their financial journey, and we would make it the best member experience they have ever experienced. Tonight, I want to introduce our United States Senate Federal Credit Union panelist team. We have the one and only Carrie Lazar. She is with our marketing department. She is member engagement representative. We also have Milton Aguilar Bolanos. He is our membership development officer. I am Kim Fridley. I am the membership development analyst here at the credit union, and it is our honor also to introduce a very special guest and credit union partner from GreenPath. We have Bill Folks with us. He is an experience manager at GreenPath Financial Wellness. He joined GreenPath in November of 2008 as a financial counselor, which now is known as a financial wellness expert. So we have an expert with us tonight, you guys. He counseled in the areas of bankruptcy, debt issue, housing counseling with members of credit unions, the GreenPath Partner Experience Team. He joined them in 2015. It has been working with credit unions and their members ever since. He is all about the credit union mission of people helping people. So let's give a warm welcome to Bill Folks.
Thank you very much, Kim. And as Kim said, my name is Bill Folks. I'm with GreenPath Financial Wellness. And I want to thank you all for joining us for our webinar tonight. It's titled, "It's Time to Prepare for Student Loan Payments to Resume." A little bit about GreenPath. We are a nonprofit HUD-approved housing and financial credit counseling agency. We've been around since 1961. We started out as a regional consumer credit counseling service We were the budgeting service actually for the Michigan Credit Union League, and we grew to become now the organization we are now. With GreenPath Financial Wellness, we counsel in all 50 states over the phone, face-to-face counseling in 50 locations across 20 states. And our mission is empowering people to lead financially healthy lives. And I'm so glad you're here I'm so glad to be here today to help provide some clarity and direction on what's going on with student loans and what steps to take in order to prepare for student loan payments to resume this fall. Now, GreenPath, we have been around, like I said, since 1962. And one of the things we do is webinars like this are one of the ways we help to empower people to lead financially healthy lives. And as well as our free one-on-one counseling sessions on topics of including student loans and a variety of other financial education resources. We have a lot of ground to cover during our time together today. So let's go ahead and get started. We're going to dive right into our topic for this webinar, preparing for student loan payments to resume. Over the next 30 minutes or so, we are going to be talking about, first of all the current status of all the federal student loan programs, and then we'll talk about repayment options and how to choose one. And we'll also wrap up by covering the steps to take now and steps to take soon. Before going any further, I do have a bit of a disclaimer. First, the information we're covering today is relevant for federal student loans covered by the Department of Education only. This information typically wouldn't apply to private student loans or commercially held federal loans. And it's not to say that there aren't options for those, but a lot of times those are on a case-by-case basis, and it really depends on the lender and the terms of the loan. Secondly, we are providing a lot of general information that may be true in some cases, but it may not be true in every case. And there still may be unique circumstances where the information we provide may not necessarily be relevant. So we strongly encourage you to communicate directly with your student loan servicer for certainty about your situation. And we hope the information we provide will help equip those of you to have those conversations with your student loan providers. And finally, we know for certain that more now than we did just a few months ago, because a lot's been changing. This is a development situation. And we're sharing information that is up to date as of today, August 23rd, 2023. But please be aware that there may be additional clarifications and updates over time. Continue to check studentaid.gov for most up-to-date, reliable information as details are clarified over time. I'm going to go ahead and put some information in the chat for you. I mentioned our website a few slides ago. You also want to make sure that you're checking out studentaid.gov for reliable, up-to-date information as well as you go about your student loan payments. All right, so let's start out our time by taking a look at what exactly is going on with student loans right now. There's been a lot of news back and forth with student loans over the past really 3.5 years, but especially over the past year. So we want to make sure that we're all on the same page about where things stand right now. First, student loans are resuming payments this fall. During the payment pause, which started back in March 2020, interest stopped accruing on student loans. And this comes to an end in just a few days, actually, on September 1st. And then student loans will resume accruing interest based on the terms of each individual loan. Soon after that, student loan statements will start going out either in September or early October, depending on when your first payments will be due. You get your first bill at least 21 days before the payment due date, and the statement will tell you the payment due as well as the date that it needs to be paid. That due date will be sometime in October 2023. I know we've all heard several times over the past several years that student loan payments are resuming, and then that date keeps getting pushed back. But unfortunately, it's for real this time. Congress passed a law requiring it, and student loans are resuming, and they will be starting due in October. In October last year, GreenPath held a webinar discussing student loan relief, and some of you may have joined us for them. We had a bit more of an exciting webinar talking about the student loan debt relief program that was announced around this time last year. Unfortunately, this plan, which would have forgiven $10,000 or $20,000 in student loan debts for borrowers making over a certain amount of money, was blocked by the Supreme Court. And therefore that's not going to be implemented. So even if you apply for this debt during the relief window where the applications were accepted before the legal challenges shut it down, even if you receive notification that your application was accepted, you will not be seeing that broad $10,000 or $20,000 student loan debt forgiveness at this time. And I want to be really clear here, this applies only to the sweeping 10 and 20,000 debt relief or for those who receive a Pell Grant, and that money was available to us who made over a certain amount. And I'm not referring to the public service student loan forgiveness or any of the more targeted program forgiveness that was approved for a smaller group of people. So in summary, if you have an outstanding federal student loan balance, even if you're hopeful for it to be forgiven under the debt relief program that the president announced a year ago, you will have student loan payments coming due in October 2023. Unless you let school within the last 6 months, and then you're going to be in an automatic payment period for at least 6 months. And at that time, or if you're eligible to take some of the actions we're going to discuss over the next 20 minutes or so. Now, for those of you making student loan payments before the student loan pause, a lot of may have changed for you during those 3.5 years. Income, other expenses, family size, and more. And the payment you were on prior to the pandemic may not make sense for you anymore, or may look different than it did 3.5 years ago. Those who graduated or left school over the past few years may have been preparing to make your first payments ever right now. And whichever of these categories you fall into, I recommend that you spend some time exploring your repayment plan options to determine what's best for your situation as the payments resume. And we'll talk briefly about a few options, but I can't get too far into the weeds during the time we have today because we have limited time. So I'll be sending over some links to you that you can explore the repayment options in more detail and look at comparisons across the board. I'm also going to share these links with our host here at U.S. Senate Federal Credit Union so they can make sure they get these out to you. And this just in case I forget to send them while we're talking. Every link I will be sharing in the chat during this section comes from studentaid.gov. And so if you're watching this recording after the fact and don't have access to the chat, studentaid.gov is your one-stop resource to learn more about everything we will be discussing. But I will be sharing links to certain various pages in studentaid.gov. Now, before you start exploring the different repayment plan options, there are a few things I want to encourage you to ask yourself first. First, what are your short-term and long-term financial goals? Do you have a goal to pay off all your debt ASAP? Is purchasing a home a goal of yours within the next couple of years? If so, your priority might be to save as much money as possible to be prepared for that purchase. Think also about your short-term goals with your student loans. So specifically, if your goal is to pay as little as possible each month, regardless of how long it's going to take you to pay them off, how much you will be paying in interest, then for those people, a lot of people, this might be the case that they're really not concerned with what the interest is. They just want to pay as small amount as possible. They have other things that they would rather be spending money on. They have other priorities, and their goal is to have a smaller payment. Maybe your goal is to pay your student loans off quickly, but you're also willing to dig down deep and find every spare dollar to throw at your loan. But you want something maybe in the middle where you have a reasonable payment, but you're able to make payments as you can. It's helpful to know that your financial goals, what your financial goals are in this case, and it's going to help you choose the right repayment plan that makes the most sense for you. When I was a counselor, I used to say that the goals conversation really guided the rest of our conversation, and really what your goals are is going to guide what your next actions are going to be, because what your goals are, it's really going to open up what possibilities are available for you. On a somewhat related question, but one that gets a little bit more specific, is how flexible is your current budget? Do you have the ability to realistically reduce expenses or bring in more money, or would it be pretty challenging for you to do either of these things? Do you currently have money left over in your budget, or are there some expenses you know deep down would be pretty easy to cut back on, or are you already running short or barely scraping just to cover your expenses? The next logical question around that is to ask, the next logical question is to ask around about public service loan forgiveness. Are you actively working toward this? If not, then you are eligible. If you're not, and you are eligible for this program, are you interested in working toward it? If you're not familiar, the Public Service Loan Forgiveness Program forgives the remaining balance on your direct loans after you've made 120 payments, 120 qualifying payments, while working full-time for a qualifying employer. Once payments have been made under certain repayment plans, primarily income-driven payment plans, which qualify for the public service loan forgiveness, then you will qualify. And that's important to ask this question when you're applying for a repayment plan. Will this qualify for public service loan forgiveness if you work for a qualifying employee? And qualifying employers include US-based government organizations, military branches, many nonprofit organizations. And if you're curious if your past, present, or potentially future employer is a qualifying employer, you can check at studentaid.gov. I'm actually going to put some links in the chat right now that will help you figure that out. And finally, after considering all these things, and if you're ready to look closer at each repayment plan that's most in line with your financial goals, then that's what we're going to do right now. So what are your repayment plan options? Let's look briefly through them together. And again, we don't have time to go super deep into any of these. So I'm going to be sharing links so you can learn more on your own. You can also reach out to GreenPath and speak to one of our financial wellness experts, and they can help you go over your options as well. But first of all, we have what's called the standard repayment plan. This is the default repayment plan that you're automatically going to be enrolled on if you don't choose anything else. And I'm going to put information about that in the chat. And I never shared the last one. So there's the one for qualifying employees, and this is the one for the standard repayment plan. And once again, you're going to be put on that one if you don't apply for anything else. That's the default one. And the standard repayment plan is set up to repay your loan balances plus interest within 10 years, with the exception of direct or consolidation loans, which have a repayment period as long as 30 years, depending on your balance. If your goal is to pay off your student loans as soon as possible, the standard repayment plan may be a good option for you. This may not be an option for you if your goal is to keep your monthly payment small. This repayment plan is also not qualifying repayment plan under the public service loan forgiveness. So if you're pursuing that option, you're likely going to want to avoid the standard plan. Under the graduated repayment plan, on the other hand, you start out with a lower payment that increases over time, usually every couple of years. The idea behind this is that as your income increases, your ability to pay that loan back increases as well. And we know that that's not always the case, but that's the thought behind it. And if you're applying for the graduate repayment plan, you are accepting the risk that your income may not increase with that payment, but that's the idea behind that graduated repayment plan. As with the standard repayment plan, loans are paid off within 10 years, and the key difference is that the standard repayment plan is set up for payments to be the same for 10 years. The graduated payments will likely change over time. And the lower your payments are at the start, the more they're likely to increase by the end of that time period to make sure that you pay them off within 10 years. If you have a direct or consolidation loan, your repayment period may again be as long as 30 years, depending on your balance. And this may be a good option if your goal is to get your loans paid in full within 10 years, and if you expect your income to increase steadily over that time. Those who enroll in graduate repayment plan do not typically pay more overall than the standard plan. So this may not be the best option if your goal is to pay as little as possible. This is also not typically a public service loan forgiveness eligible repayment plan either. So this may not be the right option for those pursuing that option. The extended repayment plan is a little bit more limited. This plan is specifically for those who are making more than $30,000 specifically for those with more than $30,000 of outstanding loan balances. And the direct loans are pretty common and include plus loans, which are parent plus loans, and consolidation loans. But a key difference is that the balance requirement is that it has to be at least $30,000 that you owe in order to qualify for the extended repayment plan option. Payments under this plan may be either fixed or graduated. And these are set up to repay the loans within 25 years. So it's going to take a little bit longer, but it adds a little bit more flexibility with that 25 years. The extended repayment plan may be a good option for those with higher loan balances or would like a little bit of a lower payment than the standard or gradual repayment plan and are comfortable paying longer and paying more interest over time. Once again, the extended repayment plan is not a qualifying repayment plan for public service loan forgiveness. In addition, it is not a great option for those who want to reduce the amount of interest they're going to pay overall or want to pay off their loans as quickly as possible. A general rule of any type of loans, not just student loans, is the longer you pay, the more interest you're going to pay. Some people are comfortable with paying more interest if they have a smaller payment, but some people aren't. And if you're not comfortable with paying more interest, then that's just a good thing to keep in mind if you have those extended payment plans. And I'm going to be the next option I'm going to spend a bit more time on because this is a relatively new option. It's called the Saving Valuable Education plan or the SAVE plan. And it's, I shouldn't say it's relatively new, it's brand new. And it was just recently rolled out by the Department of Education. And this plan replaces the former Repay plan and that's for direct loans made to the student. It's also for plus or consolidation loans. Actually, it's not for plus or consolidation loans for parents that are not eligible for this program. So plus consolidation loans are not eligible for this time. This is just for loans under the student name. And I'm going to go ahead and put that information in the chat on where to get more information about that from studentaid.gov. Give me 1 second. All right. The SAVE plan calculates your payment at about 10%. I shouldn't say it about, calculates your payment at 10% of your discretionary income. Discretionary income is the amount of money you make between your adjusted gross income and 225% of the U.S. Department of Health and Human Services poverty guideline. The SAVE plan increased this from 150 under the previous Repay plan, which is a win for those looking to lower their payments. Another win, and this is a brand new program, so it's taken a bit of time for all the benefits to fully take effect. But we do know that starting in July 2024, this will be cut in half. The payments on the undergraduate loans will only be about 5% of the income you make above the 225% of the poverty line versus the 10% they're asking now. And they will start and if you do have undergrad and grad loans, this will be weighed on average between 10 and 5% based on the original loan balances. Under some repayment plans, it's possible for loan payments to increase as payments are made. Loan balances to increase as payments are made if not enough is going to cover the interest of the charges that accumulate each month. And one really cool feature about the SAVE plan is that that's not going to happen. 100% of the remaining interest on either subsidized or unsubsidized loans will be waived if your payment is not sufficient to cover it. So for example, let's say you have $100 interest that accumulates on your loans for the month, and maybe your repayment plan under the SAVE plan is only $75. As long as you make the amount of the payment that you agreed to make, then that additional $25 in interest will not be charged and your balance would not continue to grow. Now, your balance will not really be getting any smaller either. So if you're going to be making the payments and your balance may actually stay the same if you're just paying the interest that accrue. But the good news is that even though it's not going to be getting smaller, it's not going to be getting bigger, which, and that could be pretty frustrating for a lot of people, especially if they're not expecting that the balance is going to continue to grow while they're making payments. After paying on your undergraduate loans for 20 years, any remaining balances will be forgiven, or 25 years if the loans were taken for grad school or professional study. It's important to be aware that this amount may be taxable, but you can discuss that with a tax professional at the time to get a better understanding of what that may look like. And of course, things change all the time. Who knows, in 20, 25 years, the law may be different. They may not tax it. But as of right now, today, that may be taxable. And the same thing goes for the rest of the options that we're going to discuss. If a remaining balance is forgiven, it may be taxable. So keep this in mind as we go over the next few options. And there are also more features in this new plan. And we don't have time to go into all of them in detail. But again, some of them will not go fully into effect until next year. So I want to encourage you to check them out at studentaid.gov. And this plan may be a good option for those of you who are looking for a lower payment and are concerned about how long you're going to be paying. Also, the SAVE plan is eligible for repayment under the public service loan forgiveness. So this may be a good option if you're looking to pursue that. So none of the previous plans we talked about before this were eligible for PSFL, but this one is. And this may not be a good option for those who want to get their loans paid off quickly and are concerned about limiting how much they're going to pay overall. This will not be a good option for those with Parent Plus loans, as those, again, are not eligible for this plan. And I'm going to put some information about that in the, where to get information about that in the chat as well. Now, in addition to the SAVE plan, the next few options I'm going to be talking about are going to fall under the bucket of income-driven repayment plans. These last options are all pretty similar, so I'm going to move a little quicker through these. And the first is a pay-as-you-earn plan, which calculates your monthly payments at 10% of your discretionary income. But this ensures that the payment is never higher than it would be if you chose to make the standard repayment plan. Payments are calculated each year based on your current income and family size. The pay-as-you-earn plan has a 20-year repayment period, and any remaining balance is forgiven after you've satisfied this. The pay-as-you-earn and the other income-based plans we're about to cover are also qualifying for public service loan forgiveness, or PSFL repayment, and they may be a good option for those who are looking to have a lower monthly payment. This and the remaining income-driven options we're going to discuss may be a good option for those who don't have high debt compared to their income, or for those who want to repay their loans as soon as possible and want to reduce the amount that they will pay overall. The income-based repayment plan calculates at 10% of the discretionary income for new borrowers, and new borrowers starting when they started in July 2014, and 15% of those who borrowed before July 2014. So once again, 10% of discretionary income for new borrowers starting in July 2014, 15% for those who borrowed before July 2014. This plan also ensures your payments will never be more than they would have been under the 10-year standard repayment plan. The repayment period in this plan is 20 years for new borrowers after July 2014, and 25 years for borrowers before then. Any remaining balance is also forgiven at the end of this repayment period, but also may be taken, may be considered taxable income as well. Final option I want to touch on briefly is the income contingent repayment. This is similar to income-based repayment, but a main difference is that payments are a higher amount of your discretionary income, 20% of the amount of the amount you pay with fixed payments over 12 years, with an adjustment made according to your income. The payment will be based on whichever of these amounts is less. And the income-based repayment plan has a 25-year repayment period, after which any remaining amount is, as you probably guessed, forgiven, but also potentially taxable. One thing to note here is if you have parent loans like Parent Plus, this is only available. This is the only available income-driven payment option you have if you want to consolidate these loans into a direct consolidation loan. So that was a lot of information. So thanks for hanging with that. But again, please check out the Student Loan Simulator at studentaid.gov to compare and contrast the repayment plan options that may be eligible for you. Now, however, you may be thinking, Bill, I just can't make any payment at this time. And sometimes that happens. I'm already running short each month, and I'm struggling to keep up with my basic expenses. And the thought of adding a student loan payment in the mix is keeping me up at night. And if there's one thing I want you to know is that you're not alone. And second, you do have options if that's your situation. However, it is imperative that you communicate with your servicer and find the option that is right for you and get them to officially agree to it. Please do not ignore your student loans or let them fall behind because you make a payment. That is the worst, because you can't make a payment, I should say. That is the worst thing you can do for your student loans, or for any loans for that matter. And when I was a counselor, I spoke with people all the time who they knew they couldn't make a payment, or they felt they couldn't make a payment, so they just ignored the student their lenders. And that is one of the worst things you can do. You always want to make sure you're speaking with the lender. They're a lot of times they're more able, and frankly, they're more willing to work with you if you let them know that you're going to be having trouble before you get into trouble. If you speak with them after you get in trouble, A lot of times their options may be limited and their willingness to help may be limited. So make sure you speak with them before you fall behind, or as soon as you know you're going to get behind, if you think you're going to get behind. Now, that being said, the first step you're gonna want to do is explore the repayment options we just covered using the loan simulator at studentaid.gov. For those who fall into a certain income bracket, you may be eligible for a zero payment. This means that your loans are under repayment plan officially, working toward that maximum repayment period, which your loan balances are forgiven, with a zero payment due every month. This, I should point out, is best case scenario for some situations, but not all situations. And even if you're not eligible for a zero payment, your payment due may be very minimal. I've seen student loan payments as low as $5 under some of these repayment plans. Once again, that doesn't necessarily mean you're going to be paying something that small, but a lot of times you'd be surprised at how small your payment could go down. It's important to note that you may have to reapply every year and provide updated information and family size info. But this is just the first recommendation we have. And if you're concerned about your ability to make payments, explore the options to see if you're eligible for a zero or very low monthly payment. If you're not eligible for that, and perhaps you're experiencing a temporary financial hardship, and you anticipate it getting better or being resolved, communicate with your loan servicer to find out if you're eligible for forbearance or deferment. This may give you some time to not have to make a payment and not have to make a forward payment while you get your ducks back in a row. This is also important from having a zero payment under repayment plan based on your income, as it typically does not count toward payments toward forgiveness. But this may be a good option if you're temporarily unable to make payments as you're required to make that you may be required to make under a repayment plan. Finally, if you're not eligible for an affordable monthly payment and are not eligible for forbearance or deferment, and there's just simply no way you can make a payment that you have due at this time, the Department of Education has created a temporary on-ramp period as student loan payments resume. This is only expected to be in place for the next year and is designed to come alongside those who cannot make a payment. This on-ramp means that late, partial, or completely missed student loan payments will not lead to negative credit reporting or loans being sent to collections or transitioning to default status. However, this should be considered a worst case scenario because it is a temporary option and payments are officially due and interest will still be accruing even if you're not making a payment. And the Department of Ed just wants to limit the long-term ramifications for those of you who might need a little bit more time getting their payments back on track. Again, I really encourage you to explore your repayment plan options and determine your ability for forbearance or deferment first. Please don't count on this on-ramp being a long-term solution for you, especially because we don't know yet what exactly is going to happen at the end of this on-year ramp to any balances that may have fallen behind. I also just want to mention, put this out here real quick. Some of you may have questions regarding whether or not to consolidate or refinance your loans. This is an option that has a lot of moving pieces coming into play. And as with everything, both consolidating and refinancing have pros and cons. And different guidance will make sense to different people depending on your financial situation and goals. If you would like to chat through whether or not consolidating or refinancing makes sense to you, please reach out to GreenPath to speak through your financial situation with a financial wellness expert. This is exactly what we're here to do. And I'll be honest with you, I may know a little bit more than the average peer about student loans, but I'm far from an expert on them. We actually have student loan experts who are available to speak with you about your student loans. And they can talk with you and help you figure out what to consider so you can make a fully educated decision on what your option is that's going to best fit within your overall financial situation and goals. And if you put a question about this in the chat, if I can't answer it tonight, please be sure to reach out to one of our counselors so they can talk through this detail with you. You can reach out to us at the phone number on the screen, 877-337-3399, or you can use that QR code there to be taken directly to our website to make an appointment. All right, as we come to the end of our time together, you might be asking questions, what steps can you take now and in the weeks ahead to prepare for these student loans to resume? First and foremost, make sure your student loan servicer can get a hold of you. Servicers will be reaching out with info and statements, so make sure they know how to get a hold of you. A lot of services have changed during the pandemic. I don't have any student loans, but my wife has some student loans for a master's degree she got about 11 years ago. Now, her loans were forgiven through the Public Service Loan Forgiveness Program, but before that happened, her servicer changed about 3 or 4 times. And so the bottom line is, don't count on your previous servicer being who you're going to still be paying. It may be the previous servicer, but there's a pretty good chance that it's not going to be. Log into studentaid.gov, your account at studentaid.gov, to find out who your college loan servicer is, and I'm going to put that in the chat as well. And once you determine who your servicer are, head to their website and register for an account. And if it's a new register for account if it's a new servicer, or log back in if it's the same servicer as before. You also want to carefully confirm your contact information. Even if you have the same servicer, a lot of things have changed for a lot of people in the last 3.5 years. Some of you may have moved. And so if that's the case, you're going to make sure your address is updated. And many servicers can communicate via email. So ensure that your servicer has your current email address as well as your current mailing address and phone number. If you plan to set up auto payments for your student loans, which can be recommended, I recommend it. Take a look at confirming the account information that you have that these payments are going to be coming out of. Even if you know that your bank account information hasn't changed, you're still going to want to confirm your auto enrollment options with your servicer in order for this to resume. Not only does the auto pay and short payments get made on time, but you'll also receive a 0.25% savings on your interest rate if your loans are set up for auto pay. So every little bit helps. We've talked briefly about a variety of payment options. Now it's time to explore which options make sense for you. So as we exit this webinar tonight, go use the loan simulator at studentaid.gov to determine which repayment options you are eligible for and compare the options to one another. This will ask you some general questions about your financial situation and goals, and then recommend a repayment plan based on your financial situation and goals. This recommendation will include some information on why they think it's a good fit for you, and will provide an estimated monthly payment for you, estimated total to be repaid, and estimated payoff date. There will also be an option to view and compare all plans. And so I recommend that you do this and carefully look at the differences that each payment plan offers and what it would look like to ensure that you are choosing the best fit for you. And you can find the Student Loan Repayment Simulator at this link right here. After comparing your options and choosing the one that you feel is best for you, go ahead and apply for it at studentaid.gov. Remember, you will be automatically enrolled in the standard repayment plan if you don't choose a different option. Now, if you're happy with the standard repayment plan, then you don't need to do anything. But if you don't want to go into that standard repayment plan, now's the time to explore your options and apply for the repayment plan that best fits your situation and goals before the statements start coming out in September. I recommend that you do this in the next 2 weeks, or if you can, by the end of August. And if you're on an income-driven repayment plan, you want to do that. If you're on an income-driven repayment plan before the payment pause, then at the very least, you're going to want to recertify your income. If your student loans were in default prior to the beginning of the student loan pause, which means that your student loans have fallen far enough behind that they've gone into collections, this can hold you back from a lot of things like going back to school and potentially even purchasing a house and other financial goals. The Department of Education has created the Fresh Start payment as a temporary one-time program to get your loans out of default. To take advantage of this program, you must contact your loan holder and let them know that you would like to use the Fresh Start program, and your loans will be transferred to a new loan servicer, at which point the defaulted loans will return to an in-payment status, and the default record will be removed from your credit report. And here's some information on how to get more information about that program. Once this has taken place, you'll get the opportunity to choose and enroll in a repayment plan. You can use the loan simulator we discussed a few minutes ago to compare your options and choose the plan for you. You'll then start making those payments, but you're also going to make sure that you prioritize keeping the loan current moving forward, as this program is a one-time option. If you're concerned about your ability to make payments, you will need to follow through on the steps we discussed before to explore your options with the servicer. or what's that for? You want to make sure you discard an option with the servicer and for a reduced or temporary pause payment. This is a huge payment for those you who have maybe have loans in default. So please connect with your loan holder to learn more about the actions to take to get resolved and move forward. And once you have an estimated payment amount for either regular repayment or under the Fresh Start program, it's going to be important that you take a look at your budget and determine if this fits at where you currently stand. If not, it's going to be time to explore what changes you can make to fit the student loan payment into your budget. And I get it, a budget isn't going to solve every problem, but it's a necessary part of the solution. You can't get to where you want to be without taking a look at your budget. And GreenPath has some resources that can help you with that. Check out our budgeting worksheet and align priorities, Learning Lab Plus courses, and both of those are available at greenpath.com/USSFUC, and can help you walk through to find room in your budget for your student loan bills. And we'll put that information in the chat as well. And finally, as we get ready to wrap up, I want to make sure that you don't need any more budgeting changes. Commit now to transfer the amount your student loan payment will be starting in October to your savings in September. That way you can get used to that payment coming out of your paycheck or coming out of your bank account. After a while, you're not going to even miss it, but this will give you a chance to do a practice run and having this money come out, while also helping you get a little bit more of a cushion in savings. That way you have a month or so in a cushion in savings in case something unexpected happens. And make changes to your budget as needed before the payment is officially due in October. And finally, my homework for you is to call GreenPath within the next 48 hours. It's free, it's confidential, it's judgment free. We are a nonprofit. We're not here to sell you on anything or to make money off of you. We specialize in helping people understand what options they have to make the most sense of their situation and make an educated and empowered decision on what's best for your situation and goals. Now, I know we just walked through the different repayment plans for student loans to determine which one of these is going to be best for you, but that's not the end of our stress. So once you see that monthly dollar payment amount, perhaps you might start feeling even more stressed. So student loans are just one piece of the puzzle, and sometimes that you might need help with that you're not even aware of. A lot of times just getting your situation, getting one area fixed can help out with everything else. So if you've never had a budget and you really don't have any idea where to start or whether you can comfortably afford student loan payment, call us. We can help you create a budget and figure that out. If you do have a budget and you know there's no way that you can fit that student loan payment in, call us. We can help you explore options outside of your student loan that may be available to help you fit everything together. So while you may not have options for your student loans, you may have options for your credit cards that you're paying on, especially if they're high interest rate credit cards, or maybe if you have a mortgage, you might have options to bring that payment down. So we can talk about those options to help reduce the amount that you have to pay toward those bills every month. And that can help make the student loan payments a little bit more comfortable, whether there's help available for your student loans or not. If you're concerned about your student loan payments, but also have credit card balances that you're paying on, a debt management plan might be the solution for you to help give you peace of mind and help making those student loan payments feel possible. And it also will help you pay off your credit cards and improve your credit score along the way. So to speak with the financial counselor at GreenPath, you want to call us at 877-337-3399. And if there's one thing that we hear over and over again, people say is, I've called sooner. One thing I like to say is our services aren't just for people who are in trouble. You do not have to wait until you're in trouble to get help. Now, certainly if you are in trouble and you are desperate for help, we're going to do everything we can to help you. But a lot of times I've seen people where they've waited until they were in trouble thinking they have to be in trouble to get help. And that's not the case. So I want you to make sure that you have confidence in what options are available. I also want to make sure you have a clear action plan and know what steps are realistic toward reaching those goals. We want you to sleep well tonight and knowing that you have a plan that you're confident with to resume student loan payments without having to make some really tough decisions or derail your entire budget or give up on other financial goals. Nobody wants to be in a situation where they're picking and choosing what's going to get paid, what's not going to get paid. Sometimes people do find themselves in that situation, but the sooner you call to discuss your situation, the better your chances are that that's not going to be your situation. So I want you to be able to dream about other things that you may feel that might be impossible at the moment, such as getting out of credit card debt or getting your mortgage paid off. But all of this is possible, and GreenPath is here to come alongside you and help you figure that out. We have financial wellness experts that are here until 10 p.m. Eastern tonight. So if you have time to call, you can call right now and take that step to get some clarity and get some peace of mind about your student loans and anything else that you might be stressing about. And so, and to learn more about GreenPath and our partnership with U.S. Senate Federal Credit Union, you can reach out to us at greenpath.com/USCCFCU, or you can call us at 877-337-3399. I want to thank you all for joining us. I want to thank United States Senate Federal Credit Union for inviting me out to speak with you all tonight. And we will open it for questions. In the meantime, you all have a great day.
Thank you so much, Mr. Folks. What an excellent webinar this was. I personally learned so much. Just had a daughter who graduated from WVU in May. So thank you for this valuable information. I hope that everyone on this call, this Zoom invite, one of your questions that you had was answered. We do have a question for you, Mr. Folks, in the Q&A. Great question. Thank you so much for asking this. This is a question that I have as well. How does this repayment plan impact those that are retired who still have loans and qualified for PSLF? Great question.
That is a good question. And so the way I understand it, and you might want to speak with either one of our financial counselors who specialize in student loans or check with your servicer, but the way I understand it, as long as you made those 120 qualifying payments, you can qualify for the plan, even if you're retired. That's how I understand it. Now, I may be mistaken, but that's my understanding of that program. So if that's the case, I would apply for it, explain what your situation is, and see if you qualify for it.
Excellent answer. Thank you so much. I'm gonna ask Milton or Carrie, do you guys see any other questions that I may have missed? Please feel free. We have an expert on the phone who can answer any questions for us.
I have a question, Bill. I know that GreenPath counselors can help with debt management and then, student loan consolidation versus refinancing and stuff. But are you able to call a counselor and will they walk through each, like your personal situation and help you decide which repayment plan might be best for you out of the ones that you listed?
Absolutely. So our goal whenever we do complete a consultation with anyone is to explain the pros and cons of every plan. And there are advantages and disadvantages to everything. I mean, I mentioned briefly our debt management plan for people who are looking to take care of unsecured debt. There's advantages and disadvantages of that as well. So we're going to explain the pros and cons of all of the options that are available for you, and ideally give you the information you need to make a sound decision. Now, when I was a counselor, I really tried my best not to say, hey, this is what you should do. I would give you the information, say, what do you think you should do? Now, if you just come out and ask me, Bill, what would you do? I actually had someone ask me once, what would you tell your sister if she were calling? I said, fine, if you want to put it that way, this is why I tell my sister. So we'll do that if we need, but our goal is to make sure that you have the information that you need to and help you come to where the right decision is. And don't be afraid to say, hey, what do you think I should do? I mean, a lot of times we try to avoid doing that, but if you ask us, we'll tell you, okay, this is what we think you should do.
And this is specific to the student loan repayment options, like the ones you mentioned, like the I already forget the name, even though I have them all down, but like, the graduated and the direct and all that, they'll assess your situation and kind of help you surmise which one of the student loan repayment options might be okay.
Absolutely. That's exactly what we do. Not only student loan options, but also any option. We're also going to let you know, hey, listen, if there are certain things that just you're not going to qualify for, we're going to tell you, listen, don't waste your time. You're not going to qualify for that. For instance, the public service loan forgiveness. There are a lot of organizations who you would think will qualify for public service loan forgiveness, but they don't. I don't believe that credit union staffers qualify for public service loan forgiveness. And maybe they do now, but at one point they didn't. And if that's the case, if someone say is a employee of the credit union, we would probably tell them, hey, listen, don't waste your time on that. You're not going to get it.
And is it free?
Yes, the counseling is free.
Thank you.
That's
And
awesome.
I'm sorry, one more thing. My name's Carrie and I have over $70,000 of outstanding student loan balances. What information should you have ready when you call to talk specifically about your student loans?
Ideally, you're going to want to have the information about your student loans, the account numbers, who the servicers are, how much you owe, the balances are. If you don't have that information, generally we can look them up at studentaid.gov, but it just makes things a lot easier for everybody if you have that information handy. Also have an idea of what your other expenses are, how much your income is, how much you're spending on things like grocery, gas, utilities, your rent or mortgage, things like that. All that stuff is going to come in handy. The closer you can get, the more accurate you can get, the easier it's going to make things for everyone. I would say this though, if you don't know those things, don't sweat it, don't panic, don't think that you have to have 100% of the information or even 90% of the information. There were times when I was a counselor where people called and they said, hey, I don't know anything about any of this. And so if that's the case, we can estimate where we can, and we look up what we can't estimate. But just to make things easier, having information about your student loans and your other debts is what will make things easier for that conversation.
Thank you.
That's awesome. Thank you so much, Bill. And then one of the things that I would like to ask, and perhaps you can elaborate a little more, and it's going to be a great segue to the following question that we have on the Q&A, and that is in regards, as you know, we are located in the DC area, but we do serve the Senate community, and we also are open to pretty much just everyone in the country. So with that being said, do you guys have any demographic restrictions, Bill? Can anyone within the 50 state reach out to you guys?
Yes, anyone in all 50 states can reach out to us and complete counseling. And I saw, and this might be what you are referring to, Milton. I see a question in the chat that says, can I give GreenPath information to a friend who is not a USFCU member? Will they also get free counseling? Yes, they will also get free counseling. Now, some of the programs that are available, like the debt management plan that we talked about, that doesn't directly relate to student loans, but it is something that that might impact your student loan payments. Those things are regulated by state law. So how much debt you're able to put in that, how much you're going to pay, what types of debt that you're going to put in there, those things are going to be impacted by where you live. But the debt management plan is available in all 50 states plus the District of Columbia.
Awesome. Thank you so much for answering the question. And again, I just want to reiterate what Bill just said. So you don't have to be a USSFCU member in order to, reach out to GreenPath. Again, they're a national nonprofit company that is willing to assist you. So if you think this information was helpful and you have any, relatives, friends that live, that are outside of this specific area of the DNB, per se, feel free to send that information to GreenPath, and they will be more than happy to assist him with any other questions and areas, specifically, what we were just talking about this evening. So thank you so much, Bill. Do you have any other questions, any other comments there, Kim, Carrie?
No, sir, I do not see any. I just want to encourage the person who asked about their friend, let them know that anyone can join the credit union. It is only $6 to join our credit union. We would love to help them with their financial journey.
Awesome. Thank you so much again. So we want to be, respectful and mindful of everyone's time. We just wanted to take this time to really, thank Bill for coming in and doing this great presentation. It has been very, very informative, very, very helpful. So again, we really hope you all, enjoyed it. And again, if you think this is something that is worth sharing, please do so. We are going to be sending a copy of this presentation to all of the participants, everyone that registered for this webinar. And so, be on the lookout for that. And again, just wanted to say thank you. And obviously, as I mentioned at the beginning of the webinar, we also want to invite you all to our next week's webinar, which is how to protect your financial data online. So with that being said, Bill, thank you so much. we look forward to bringing you back on perhaps in the near future with another perhaps a different topic. But I do know that student loans is definitely a hot one. So thank you all so much, and I hope you all have a wonderful evening.
Thank you.
Thank you.
Bye, everyone.
Thank you. Thanks, Bill.
Bye bye.